So basically, we just going strictly to the algorithm. Gonna take you some few trades actually undertaken for the past months. You know what I'm saying? So strictly, I just want to take you through smart money concepts that I use in the trading sector. That is actually ICT trading smart money concept. It's very much used, very much important to learn it, because if you learn it, you're going to secure more profits. Okay, so I want you guys to learn these concepts that are actually very much important to your trading. Okay, so you can see here that I'm using literally trading gold while trading here, and the most important thing actually in trading section, you just need to be thinking like an institution, because you're a retail trader. That's the first thing about it. You're a retail trader, so you should be thinking like an institution. Okay, because these are the ones that actually market movers. They actually create liquidity hunts that they may hunt down your liquidity. They may hunt down your buy stop. They may hunt down your sell stop. They may hunt down actually you may hunt down your, how do you call it, the stop losses. You know what I'm saying. So it's very much important to understand that you need to be thinking that so that you may not lose much in the forex market, you may not undertake more losses. So as you can see here, actually on I want to show you how you can trade using a top-down analysis, using ICT concepts, using the 7 institutional reference points. Very much important. So let's go strictly to the 1-day time frame. Okay, the 1-day time frame is very much important, okay, in your trading sector, because it will help you to get upper market buys of market segments. Okay, so it will help you to understand the market itself. It actually give you a clear view of how it is expected the market in reality. So you can see here, I'm actually on a 1-day time frame, and I just need to clear everything that is actually here. Let me just clear everything here, remove all the, yes, now we're good to go. You can see here, so we're actually on we just say that we actually need 16, right? So I just need to mark this, mark the previous candlestick, the high and the low of the previous candlestick. It's very much important. You can see here, let me just mark it. Let me just use this one, and then mark it very clearly. They're very much important. Just use this one, this week here. Okay, and then the week, the down one week. Okay, you can see there, right? So after that now you just go down to the lower time frame. Let's go now to the 4-hour time frame. There you see how the market is gonna be. You see now it's marking, it's giving you actually the highs and the lows. Let's go now to the let's go strictly to the lower time frame. Let me go like 1 hour. Yeah, 1 hour time frame, and let's see how it was. So you can see here how the market is playing. Yes, actually playing on a regression area. If I extend this particular line here up to here, it gives you the market bias. It shows you this is a support area and the resistance area. So if you learn support and resistance, you're going to understand this zone here. Okay, and then it literally gives you the market bias and making sure that you understand that there are no market controllers. You can see here and here there's liquidity that's actually here. So understanding the two liquidities in the forex market is very much important too, because it gives you the way you can understand liquidity, because you have two types of liquidity. You have the external range liquidity and the internal range liquidity. Now I want to mark this zone here. Okay, this is actually the zone right here, and the liquidity zone here. So this is a regression zone, it's a liquidity zone here. Okay, you just mark it up. Now you can see this zone here and this zone here. The market is actually, the price range is actually ranging on a specific range. That means the market is actually in a consolidation area, and that means you cannot be able to mark out who are in the market, who are the controllers of this market, whether they are buyers or sellers. Because when the market continues going downwards, it loses position and start getting upward momentum, and then the buyers takes the position, it goes again, there's some market consolidation. It's actually, the price is actually defined on a specific range. Okay guys, make sure you subscribe to my YouTube channel, because we are going to create very many big videos, deeper videos that are actually legitimizing trading sector. Okay, actually, so make sure you subscribe, guys, and then yeah, we are legitimizing ICT trading concepts. Okay, so what you can see here, because let's go now to the, you've seen that the market is actually ranging. Let's go now to the 15 minutes time frame, and then now it gives you very clearly how the market is actually ranging. All right, you can see here. So these are this support and resistance area. So that means you can see here this liquidity, that this regression point here, the market is not going down and more than there. It's actually ranging inside this range. Okay, so it's very much important to understand this clearly as a trader. Now the other thing is that if you understand this concept very clearly, it gives you the motivation of understanding the fake breakouts that can be created by institutions, because this institution may create for you best fake breakouts. You can see here, they may try to give you for example, let me use demonstration here. Okay, you can see here. Okay, no, let me use this one. I use an arrow. Okay, I use a what? Okay, let me set a line. If it breaks on this zone here, it may pretend to break this zone more further, so that it may show you that it's actually on buys, and then you put your stop loss right here. For example, if you put a stop loss right here, because it has broken this zone, let me do a reverse of it. So if it may give you for example, I'm giving you, it may give you a fake breakout, then to pretend that it has broken this regression area, and then you put your stop loss down here. So that means that this your stop loss, you can see this stop loss right here is actually hunted. Okay, it's very much hunted by these institutions. So you should be very much clear to understand that it's not all the fake breakouts that are needed for you. You should take care of so much for this fake breakouts that can be created. Okay, so make sure you understand very clearly For example, using the PDRA, the premium discount area, we usually say that you should actually consider buys on the discount area and consider sales on the premium area. Don't buy on the discount area, don't sell on the don't buy on the premium side and don't sell on the discount area. Okay, very much important. So in this place you can secure your trades here, and understanding that if you create a breakout and it does a reversals, these trades you just need to enter on reversals. It's very much clear. You can sorry guys, you just need to enter on reversals because it's very much important. Okay, yeah. So how can you get the internal range liquidity? Internal range liquidities are actually defined by imbalances, market imbalances. Let me show you like this one. If you understood the market imbalance that was actually created on this zone here, look at this zone here. This is a zone that is and make sure that it's not mitigated. Look at this one. This is in imbalance and it should be respected. You see, it's an imbalance that the market respected and you came back for it, and then it tried to come for it again. It's a very strong imbalance. It's a fair value gap. Fair value gap is very much respected. It's one of the highly respected institutional reference point. You can do a reference of it. Okay, so the other one is another block that's actually the last candlestick to print. Okay, the last candlestick to print actually. So for example, this you can plot this like another block before a huge move, right? You see this one is a huge move. The market was actually selling, and then this is the last candlestick to print. Look, let me look at this point here. This is another block. Sorry, it's another block right here. Yeah, and the other one is actually here. Okay, so if you understand the concept, that's another block. That means that the price will make sure that it comes to this zone here. Okay, it's actually a support zone, and make sure it respects the liquidity void is actually very much important. So thank you guys. Subscribe for more. Yeah, let's get it in.